So good day. So our topic for today is partnership. So let's now start our journey to learn more about of this partnership. So types of business formation. So we first take a look as to ownership. So number one, we have the sole proprietor. Proprietorship is when the business is owned by an individual person. So meaning they do business alone. So meaning he's just the only person who was doing this particular business. It was called sole proprietor, meaning only one. So normally this kind of ownership is easy to start and the most common type of entrepreneurship in the Philippines. So normally there are the advantage of this one would be little or no restriction, low startup costs, and no additional taxes. So the disadvantages, all the power are given to one person. So meaning if this person could mismanage it, so he was just the only person that would be knowledgeable for that one. Hard to raise money because he's only one. And then unlimited liability because liability extend up to her or his personal belonging. So partnership is composed of two or more person. So usually a partnership do business either written contract or not written contract depending on, but it would be discussed further since this is our focus. So the positive side is that there's a benefit of teamwork because as the saying goes, two heads are better than one, low startup cost, and greater borrowing capacity because there are already two or more person would be able to borrow money and to put money on the business. Now, the disadvantages, risk of disagreement. So, when a partner will be able to disagree, dissolution could emerge. Next, the profit are now divided into two or more because under sole proprietor, the profit are merely on his or her own. Then potential unlimited liability, just like sole proprietor, the liability extend up to their personal belongings. So next we have now the corporation. Corporation here in the Philippines, it must consist of 5 incorporators. And the number would depend upon the shares that has been allowed by the SEC or those Securities and Exchange Commission in a different country. So we have the pros and cons. The pros or the positive side is the protected from liabilities because it does not extend up to the personal belonging of the stockholders, easy startup, and no additional or usually has additional taxes because it is taxed as a separate part or corporation. And then stocks are provided as a good funding options. So the disadvantage is higher startup costs because there are a lot of legal requirement. And then hard to raise capital on a different parlance. And then double taxation once is the profit and then once the dividend was being declared or the dividend is being retained or improperly retained tax here in the Philippines. And then lastly, we have the cooperatives. So cooperatives, these are a private business owned and operated by a person who uses its product or services. For example, the farmers cooperative wherein there are this little person who will be able to gather to raise fund for themselves. So the advantage is that employees are engaged and are only taxed under their income because usually cooperatives are tax exempt. And then the consequence is hard to raise funding outside the cooperative because normally the fundings also come from their respective buckets. Okay, as to activities, we already discussed the activities in our previous video, income tax. So I put the link down so that you could click it out. So we know that service business, those that would render services just like lawyers, accountants, and engineers. You have merchandising, those that are engaged in trading or buy and sell of product. And then manufacturing, those who bought raw material and convert it into finished product. Okay? So, partnership, according to the Civil Code of the Philippines under Article 1767, these are two or more persons who bind themselves to contribute money, property, or industry into a common fund with the intention of dividing the profit among themselves. So take note, the intention is to divide profit. So any stipulation that exclude one partner from the profit makes this partnership void. Okay? As to the valuation, the money, we don't have any valuation problem, but for the property, as stated in the accounting, property should always be valued at fair market value in the start off of the partnership. Okay? And then the industry, it's more on the skills that has been contributed if the person don't have the money and property. Okay? So next, we go to the features of our partnership. So what are the usual features of partnership? So number one, we have the so-called creation. So creation of the partnership, since this is also a contract, normally we have a written contract. So if there's a written contract, or meaning there is a verbal or a written agreement, it become express. And as to implied, if the partnership don't have any agreement, but then they are just bind themselves to do business together, then it becomes implied because there's no written agreement as to whether the entity would be starting business. So juridical personality, this means that since it's a business, this become separate and distinct from each of the partners. So meaning a partnership also be able to buy, to possess their own property, to sue and held be contempt in court or liable in court. So the purpose, as stated, intention is to profit realization. Duration normally no limitation upon the duration is set by the law unless otherwise under the classification. So transfer of interest, for the partnership, the partner may not dispose his individual interest in the partnership so as to make assign as a partner without a unanimous decision, because a partnership are merely created by trust. Next, power to act as the third person in the absence of any stipulation or the partner become bind as a partnership. So meaning if A, B, and C is a partner and A contracted to D, meaning all the partner A, B, and C are still bound or liable to D. Okay? So dissolution, this is when the death or incapacity or withdrawal of a partnership, because the interest will now become diluted, not the usual interest. Okay? Next, we have the representation, so or the agency. As a rule, since they are a partner and need or required a unanimous decision, every partner is an agent of the partnership. Okay, unless otherwise stipulated. So the profits may be stipulated among the contract, or if not, normally the average capital of the partner. Okay. Right of succession, take note that the partnership don't have the right of successions because the partnership are built mere on trust. There is no succession unless it's a unanimous decision of the entire partner. So we forgot the form. So the form may be what? It could be written or not written. However, under our legal, if the partnership capital is more than 5,000, then it should be written. Otherwise, it's unenforceable. And if the partnership contribute a real property. Okay? As to liability, it has unlimited liability unless otherwise stipulated because it extends up to their personal belongings. And then taxability, this is also a double taxation because the profit of the partnership is taxable and the dividend given to their respective partners are also taxable. Okay? So, types of the partnership. So, we have universal partnership. Okay, so we have the universal partnership. It has two kinds. So number one is the universal partnership of present property and universal partnership of profit. So when we say it's a present property, meaning all the properties of the partners become owned by the partnership together with its fruits and dividend that has been earned by this particular property. So once contributed to the partnership, all the present properties of this partner become now owned of the partnership. As to the profit, universal partnership of profit, the partnership is only granted a usufruct, the right to use the property. So meaning all the fruits of that property become now to the partner, but the ownership of this property still retained on their respective partners. Okay? Okay, if you have questions, just type it at the box below or the comment box below. Then for a particular partner, those that has an object determinate their use, fruit, and specific undertaking. Okay? So meaning, if a particular property was given to the partner, that is merely what the partnership would own, not all the properties, unlike the universal partnership of all present property. Okay? Next, as to liability, we have the general partnership. General partnership extends liability up to his or her personal property. As to limited property, the liabilities is limited only up to his or her capital contribution or the capital balance of this particular partner. Next, we have as to duration. So, duration, partnership at will, meaning they could have the partnership in time until they want or can be terminated anytime. As to fixed term, there is a stipulated date as to whether the partnership would end. So, we have the legal existence. When we say de jure partnership, those that abide all be able to comply with all the legal requirement. Okay? If one requirement, for example, there is this filing that the partnership was not able to file or did not put it in writing, then it become now de facto partnership. Those who miss one or more of the legal requirement. As to representation, we have the real partnership. Those who is a real partner or meaning known to other person that they are a partner. Ostensible or estoppel, those that represent themselves as a partner but actually not a partner in the partnership. Okay? So next, we have the secret partnership. So under the secret partnership, these are the partner who takes active part in the business but is not known as a partner by the public. Open or notorious, those who active part and also known as a partner of the partnership. We also have dormant, those who do not do active participation and not known as a partner in a partnership. Okay? Next, we have as to purpose, we have the commercial, those that are engaged in trading, merchandising, or manufacturing. Those that are professional, also known as not trading. These are the partner who exercise common profession. Like for example, SGV. So it's for the auditing firm. We have the law firm who exercise their specific profession. Okay? As to contribution, we have capitalist and industrial. Capitalist, those who contribute money or property. Industrialist, those who contribute their skill to the partnership. Okay? So as to the management, we have the managing partner, the one who manages the partner and stipulated as the manager or would act as the on different affair of the entity. The silent partner, those that do not have an active participation or don't do the managing affair of the entity. Then we have the liquidating partner, those who are in charge in the dissolution and the winding up or liquidation of the partnership. Next, so take note for accounting, we have 4 stages of the partner. Number 1 is the formation, wherein you contribute money, property, or industry to the partnership. And here, all assets and liabilities should be valued at fair market value. Okay? Unless otherwise, there's some stipulations. Next, we have the operation. So, at the operation, we now determine the activities of the entity and the profit and sharing, the profit sharing and loss sharing of the partners. Okay? Next, we have the dissolution. These are the debt, withdrawal, or retirement, or admission of a new partner, because the interest or the P&L ratio will now be diluted. That's why it was called dissolution. Next, it's a different from liquidation, because at liquidation, the partnership would be wind up, meaning closed or would not operate anymore. It has two kind. We have the lump sum liquidation and the installment liquidation. Okay? See you guys on our next video under our formation, wherein now we will now do our computation and our accounting entries. So, if you have any question, just type it at the comment box below. If you like this video, help me reach out more people by hitting the subscribe and the like button below. God bless you and always keep safe. Bye!